How long have you been in real estate? All your life, haven't you?
Pretty much. Bought my first property when I was 23. I wish I had bought them when I was 18, and we had all had the same thing in common. We all started with a little 2-bedroom house.
Yep.
And it's like, that's where it starts.
Yes.
You don't have to start with grandeur. Start
Trump
small.
started there too.
Yeah, exactly. And I think people swing for the fences today.
The mistakes people make is they think they have to go big when they have no experience, no education, and they wonder why they lose money.
No,
you're
but
going to mess up. So why not mess up on a small deal?
With small money, with small cap.
They're so vain. I can't believe it. One of our former ex-partners, I'm a real estate investor. So how many properties? I have owned 3 homes. Said, did you live in them? Yes. Welcome to the program, Russell Gray, real estate guy, radio host.
Yeah, thanks for having me. I'm a little bit different than Robert Helms because I didn't grow up in a real estate family. I did buy my first property when I was 19, so I beat you there.
Wow.
Yeah.
First rental property when I was 24. But what I really am famous for is being the king of mistakes. And I think probably the biggest mistake that I made along the way, besides selling properties, not realizing that I should have been collecting them. So I was excited about the equity, and then I wanted to put the equity into business, and I didn't know how to keep things separate. But I think the biggest thing for me talking about vanity is that I always thought I was smart enough to figure things out. Yeah. And instead of now that I've had a chance to be around many, many successful people, one of the common denominators that I see about really successful people is they're humble. Mm-hmm. They ask for help, they ask questions, they listen intently, and then they think about what was said, and they trust their own judgment. And I was none of those things. And so because of that, I made a lot of mistakes. But I learned, I think I've learned, and we're obviously doing things better now.
I would say for Kim and I, we've never lost money in real estate, but we have made a lot of mistakes.
Yes.
And our mistakes haven't really come from our side of it necessarily. It came because we trusted people.
Yeah.
And every realist, I think the humility of it all, the humbleness, is anybody who's successful in anything has been, the scientific term for fornications. I got screwed. Everybody has been screwed. And when you get screwed, I tell you, it's, I trusted him or her. How could they have done that to me?
It's not just on the transaction side. I see the same thing on the education side. Yeah. They lead you down a path.
Oh, yeah.
People that may or may not have any experience, that doesn't matter. They can flash the checks in the front of the room. That's how you know when you start seeing check after check after check in the PowerPoint presentation. I say, how do you get a check? Here's a check for $50,000 from the title company. Well, what if I deposit $50,000 in the title company and say I've changed my mind? What do? They send me a check in my name from the title company. So those aren't hard to get.
I think that's one of our key lessons has been oftentimes we trust
too early,
but we don't verify. So when I take my eye off the game and off the numbers, and all of a sudden I'm over trusting and giving too much responsibility, and then it comes back to bite me. So that's a lesson I'm trusting. I've now learned this lesson that I will continue to trust, but I will verify.
It's so critical.
Yeah.
So Russell, you amaze me because you're one of the smartest guys I know. Academically, your mind is like a little computer, but you didn't finish college, did you?
Oh, I was too impatient. I'd been raised by a man that had dropped out of college. Smart. He got a scholarship, free ride to Stanford. Very smart man. But I think I came along and I kind of screwed things up for him. So he and my mom dropped out and he went into work. But in his late 30s, he started a high-tech company in Silicon Valley, took it public. And it was right about that time as I was watching his career. And I just felt like I tried college and I played 1 quarter of football. And then, I just wanted to get married. So I started a business and bought a house, got married. I did all that by the time I was 19. Oh. And then I sold out of the business and I sold the property and I discovered equity. I found out that I made more money in the equity on the business and the property than I did in actually both my wife and I working full time for that same period of time. So that kind of got the bug there. And I think the advantage that I had because I didn't have the patience to go to school was that I always felt disadvantaged. So I became a voracious student. And
right, you're amazing. When I need to know something, I call Russell.
I read all the time. I study. I like to listen to smart people. In the beginning, I was afraid to get into conversations, and over time, in fact, it was at one of your events, Robert. I ended up seated next to Richard Duncan, PhD economist.
Oh my gosh, yeah.
I've told this story on our show several times, and I'd gotten destroyed in 2008, and it was because of my ignorance of what was going on in the bond market. I didn't understand the bond market. You did the gold and
gold versus the U.S. dollar.
Gold versus U.S. dollar event here in Scottsdale, and I ended up seated with Richard, and he was saying that he thought oil was going to go to $5 a barrel and gold was going to go to $5,000, and I said, I'm way out of my league here, but I can understand how either one of those things can happen, but I'm struggling to understand how they both happen at the same time. And he looked at me and he goes, that's a good point. Yeah. From that point on, I learned a lot faster because I wasn't afraid to talk to smart people.
Right.
So Kim, how about you? I mean, what is your path when Kim and I meet people? Oh, they should jump into real estate. I want to just get some handcuffs and tie them down and say, look, wake up first, right?
Yeah, well, it's the same as Robert's saying. I mean, I started with a little 2-bedroom, 1-bath house, and then we went to another single family. It was a process. There is no get rich quick. There's just not. If they're telling you can get rich quick in real estate, I would run. I mean, it's been a process. The formula is the same for the 2-bedroom, 1-bath house and for the 200-unit apartment building. The formula is the same, but it takes time. It takes making mistakes. It has, we've made all the mistakes as you guys have. The tenant moves out. I raise the rent. I raise it too far, and then nobody rents. We had that. We also had
the piping.
We had a property manager who started his own business on our credit card from our apartment building and bought microwaves and ovens and tools and started selling them. And I mean, we had all sorts of things happen. We've had tenants move out in the middle of the night. Oh my gosh, yeah. But it's a process. That's why we can all continue to keep investing and keep buying real estate, because we've made all these mistakes and we have a whole thing of a bag of tricks that we can pull from.
What is the biggest blue sky pitch you've ever seen? Because we've seen them all. These guys get up there. They're generally a very attractive or good-looking husband and wife and all this, and the suckers float in with checks and credit cards. How many courses have you taken in real estate investing? They go, I have a real estate license. Well, that means you're an idiot. That's all it means to me. What does real estate license have to do with real estate investing? Zero. I mean, I can't believe how vain these guys are. You know that most real estate agents own nothing, and they're giving you advice on investing? Any comments, Kim?
Well, I just think it's interesting, and I love having Robert and Russell here because they are the real deal, and they are the real estate guys, and they are practicing what they preach. They've been investing since they were 19 and 23 years old, so they know what they're doing. But I was just looking at this article, and I'm like, where does this advice come from? So they're talking about if a recession comes, and if there's a dip in the real estate market or the recession comes, what should you do? Well, here's advice. Well, if you own property or assets, sell some so that you have cash. Okay, how hard is it to find a cash-flowing property, Robert? How hard is it?
Oh, my God.
It's hard.
It is hard. It's getting harder, right?
Yes.
And that's one of the keys. This is such an important topic because if you think we're near the top, there are things you can do, but it's probably not the stuff you're going to read in most articles written by a journalist that makes $3,200 a week.
But why would you sell when interest rates are near zero?
I think that the big thing is how people approach the problem. And this is where you guys at Rich Dad have really been thought leaders, because most people look at investing as trading.
Yes.
Buy low, sell high.
Exactly.
They've been conditioned to buy low, sell high. That produces commissions for the brokers, that produces capital gains for the tax man, and it produces cash that feeds the bankers. And so the education has been slanted, and it's Wall Street education, but people approach real estate the same way. You have a completely different approach, which is a more fundamental approach, which is the income. And if you focus on the income, you have staying power. You can ride the ups and downs. The price doesn't matter. What matters is the cash flow. And as long as it's positive, you're in. And over the long term, even just the pay down of the loan and modest inflation will build reliable, resilient wealth. But people don't think that way.
Well,
that's why I like it.
I mean, even in 2008, when the whole thing came crashing down, we're fine.
Small ebook, big impact, The Wealth Tree. The only 4 ways that will make you financially free forever. Download it here for free.